Okay, so thanks everyone, as comes up on the screen. So I'm the Managing Director of the agency. We've been running now for 3 years and listed under code AU1. Thanks, Colin. You can probably go quickly the next 2 pages. All right, so this is a quick snapshot of our metrics and share price. You can see the effect of COVID, although it's been a small drop. The point here that I'd like to raise is that our top 20 shareholders own 80% of the company, and most of the top 20 shareholders are actually involved in the company. So the top 5 there are all key agents that are with us, or management. Thanks, Cole. All right, so why invest in the agency? Well, we've been the fastest growing real estate company in the country. We've established a national presence across key cities, Sydney, Melbourne and Perth. As I said, from a standing start, we've attracted now 300 top quality agents. We're the only company that has 2 brands that are running in parallel. And we've also secured a substantial rent roll of 4,800 properties. In the quarter that's just passed, we finished with an EBITDA of 220,000. So that's the 3rd quarter that we've had a positive EBITDA. We've invested quite a bit of our funds back in the growth as we've gone into different states. The main point I want to talk about in this presentation is how we're rebounding strongly out of COVID. So even with COVID hitting us in April, we managed to achieve our 3rd highest quarter in commissions, which was about $9.1 million. One of the things that COVID has shown us is that we built our model on a work anywhere platform and cloud-based. So we were very lucky that this is the foundation of our model. So when COVID hit us, for us, it was a very quick integration into working anywhere and all the staff working from home. We only have a few offices as hubs, and most of the agents work remotely and come into the office when they need. Next slide, Colin. Okay, so the crux of our model, when we put this model together, we looked at the industry, and the industry is highly fragmented. It's either made up of franchises or independent small players. And when we looked at the franchise model, what we've managed to do with ours is we've stripped away that middle layer, so with the franchisees, and redistributed the commissions both up to the agent and up to the parent company. So it's a more corporate model in real estate and fighting against really the old franchise system. So in doing that, there was a lot of advantages. One is we were able to pull together all the databases and support into a central office. We're able to bring down the overhead of support. We're able to support the brand and keep a tight control over it. There is no infighting between franchisees and the company and the corporate headquarters. We all work as one. So getting rid of that middle tier has a lot of advantages, and it's been starting to prove under our model. Thanks, Cole. Okay, so as I said, in 3 years, we've expanded quite quickly, having 300 agents. The bulk of our agents now are WA, where the model started, and New South Wales. It's a very interesting in terms of the strategies in the 2 markets. In WA, we started on probably the periphery of the high-end markets, where in New South Wales and Victoria, we dove straight into the luxury high-end markets. And in doing that, in New South Wales, for example, we have strong market share in that lower North Shore area. Thanks, Cole. Okay, so the other feature of our model is that what we try to do is try to encompass and pull together all aspects of a real estate or property sale. So we don't only just do the property sales. We obviously, as I mentioned, have the property management side of the business, and we have strong ancillary services in that we have a mortgage book that's totaling now over $1 billion. We have conveyancing in WA and also financial planning and insurance. So we try to hold hand of the client in every aspect of the cycle of a property sale and their requirements. And by doing that, we just clip the tickets at different services that come along, and it also drives us a fence around our clients and keeps them connected with the company. Thanks, Colin. Okay, I mentioned that we're the only company that has 2 brands, and we've done this as a specific strategy. This strategy is well known in other markets. For example, in the US with Realestate, they probably have about 15 brands. Countrywide in the UK also have about 30 brands. And we worked on the basis that you need different brands to attack different markets and offer different services. So what it's given us the ability to attack different property markets from high end to low end. And it's also allowed us to offer agents different services, value propositions. So at the end of the day, we see ourselves as we're there to try to recruit as many agents as possible. And rather than have a model that's one shoe fits all, we're giving our agents a menu, if you like, for them to be able to say, well, no, this is what I'd like in terms of support and commissions and marketing. As opposed, no, I'd rather more commissions and less support on another side. Thanks, Colin. Okay, so this is probably an important graph, and it shows the industry. So there's two propositions when you're talking to agents, and obviously the first one is the proportion of commission they attract, and the second factor or variable that's very important to them is the amount of support they get. And what we've been able to do is we've been able to capture that top right-hand quadrant, which is high commission and strong support. By doing this, our agents start off on a 70% commission rate as opposed to a 45-50% with franchises. But what they also get is a strong level of support. There's a property support partner that's allocated to an agent. And again, this is all cloud-based. And they basically help the agent in all the administration work from the moment they get a listing to the settlement point. On top of this now, we've developed quite sophisticated marketing support as well and branding support to help the agents get the listings. So what we've done is we've tried to make them focus on what they do best, which is list and sell. And our mission has been to take every other activity out of their hands if possible and assist them with that. Thanks, Cole. So here's a bit of a snapshot of our results going back to 2017 when it was really a concept. And as you can see, in all our key metrics, which is exchanges, number of agents, commission and revenue, we've all been heading in the right direction with that. The issue with the OPEX, obviously, as it points down, I wish we had 0 OPEX in June. That number hasn't just been finalised yet. Thanks, Cole. Okay, so our June quarter. As most businesses, when the lockdown came into full effect, we got hit as everyone else did. But again, what's pleasing was the ramp up that we had. So at the end of this financial year, we will finish with $48 million in commissions, which is up 26% from the previous year. And as I mentioned, we for the quarter, we finished on a 220,000 EBITDA. Now, that's quite pleasing when you look at that commission number. So just to give you an idea, the total commission dollars in a year in Australia is $5 billion. So for us to capture 48 million of that, almost 1% in 3 years, I think is quite a strong achievement. And this comes also with the fact that, you know, as mentioned before, we've also recruited 300 good agents across the country. We've got a target of 600 agents. And affected by a number of transactions. And with the number of transactions comes, obviously, is driven by increasing your number of agents. But we've also seen that the productivity of our agents has gone up, and that's assisted in the growth in our commission. The other pleasing point is that we've now finished with 1,000 listings, which was what we were having roughly pre-COVID. And this gives us a great sales pipeline for the coming few months, which will support our numbers in the next quarter. Also, again, during COVID, our property management's increased by 100 properties over the quarter, which I think was a great achievement by the company. So what COVID did highlight to us, which I think the industry wasn't quite considering previously, is when we were always talking about that the platform and our work anywhere model was important to us. We wanted our agents to be able to work from a cafe, from the couch of the vendor's property, anywhere that they needed to work, and do that without there being any displacement in service or interruptions. And when COVID hit, that really pointed to us that we've got a proven platform. And I think a platform now that going forward in the industry is going to be an essential requirement. Cash and cash equivalents, you can see down there at the end of the quarter was $4.9 million. You can see on the side, our annual commissions just have been growing strongly year after year. Thanks, Cole. Okay. Again, just to give people an indication of the pullout and the rebound from COVID, we've got a couple of graphs. Obviously, we've mentioned our commission. There's our sales numbers also there, and the new listing pipeline. So this very clearly shows that obviously when COVID hit and the shutdowns were put in place in April, like most businesses, that affected us. But also the numbers in the table shows here how pulling out of COVID, the business is returning to normality quite quickly. Thanks, Cole. Okay, so why invest in the agency? Well, as I mentioned before, there's $5 billion worth of commissions in this industry, and it's very much a small industry in terms of players. The largest player has probably about 9% market share. And as I said, we've now got 1% in 3 years. In WA, where the business started, we are now running as number 2 behind the main player. So that shows that we have had an effect on taking market share off the franchises. I think the industry will come under change. The franchise systems which dominated, came in the late 60s, early 70s, and not much had changed in the industry since then. We're giving the agent a lot more focus. We're putting the agent at the core of our model and stripping back the other layers of management that I think are now not required. Also, with these tough times, it's showing that running a small business is very hard in these times, and I see consolidation coming into play. And as I said, we've now got a proven platform that's attracting the interest of a lot of players. The management, with all models, they're great in a boardroom and concepts are fantastic, but if you haven't got the right team to implement, even the best ideas go nowhere. We've got Matt LaHood, who is well respected in the industry, well known, and has been a stalwart for over 20 years. Andrew Jensen, who was formerly CFO of Ray White. Maria Carlino in our property management division, who's also run Little Property and worked for other large real estate agents. Thanks, Colin.
Thanks, Paul. We had a few technical problems. For those who can't see Paul, he's a good-looking rooster. I've got a good question, right? So from a couple of shareholders, if the idea is to give the agents a greater share of the commission, how does that benefit the overall business?
Right. Okay, so if you looked at where the models were, I was saying traditionally with the franchisee would take a large portion of those fees, and the franchisor normally would only take 8% of those fees. So what we've effectively done is taken the fees that the franchisee would have had and splitting that up with us in corporate. So we take now 25% rather than a normal standard franchise company taking their 8%. And we've also pushed some commissions down to the agent and lifting them up from the 50 to the 75.